The big development driving Asian trade today was, of course, the oil producers meeting in Doha, which ultimately failed to come to a production freeze deal despite early indications that they may do. Very much this was driven by the fact that Saudi Arabia refused to be party to any oil production freeze that did not include Iran in particular, and Iran has categorically said that it will not be joining in any sort of production freezes since it has just recently had sanctions lifted off itself and is very keen to start picking up its oil production and also its global market share. Given such a scenario, even the likelihood of a deal at the 2nd June OPEC meeting seems pretty unlikely if that's where Saudi Arabia and Iran have both laid their cases. Nonetheless, we have seen a noticeable sell-off in the oil price today, back below the $40 level, but it has seemingly started to find a little bit of buying later in the Asian session, and it does not look like at the current juncture that we are going to see a big pullback, at least to the $30 level. However, that is still very much possible, but there does not seem to be the sort of fundamental developments in the supply-demand rebalancing in the market to really support oil at this level. Nonetheless, there's little hope of a deal. And even so, the oil price is still looking pretty solid above the $38, $39 level. So we'll just have to see how trade plays out through the rest of the week. The other big development today was Chinese property prices for March, which showed a steady increase, particularly in the Tier 1 cities of Beijing, Shanghai, Shenzhen, and Guangzhou. Shenzhen and Shanghai have seen their property prices rocket in particular over the past year, and the divergence between the top cities and the bottom Tier 3 cities in Chinese property prices are more stark than ever. And a bubble, certainly with regards to Shenzhen, may in fact be emerging and no doubt is a major concern to Chinese leaders. Markets across the region are all down in the red. However, they have been pulling back a little bit towards the end of the session, and it seems that perhaps some of the momentum last week may not be totally finished, and perhaps we will see some improvements tomorrow. But of course, the big fallers today have been the material sector, energy, and certainly in Australia also the banks. Much of that driven by the oil price sell-off today. So we'll see how the oil price tracks for the rest of the week, but undoubtedly it'll be a key factor in deciding equity market moves.